We had an exciting development in the Kenyan stock market last week, the introduction of day trading. Why is this so exciting? Because in the Kenyan stock market, from as far back as 2011, we've been working with a T+3 trading schedule. This means that with all movements of shares, whether buying shares or selling shares, there's been a 3 business day lag. That means, suppose you're a buyer, you complete a buy transaction, you would have to wait 3 business days before the shares settle into your account, and this means that during those 3 days, you cannot sell those shares. And let's say you're a seller, you would have to wait 3 business days before the shares leave your account and you receive your money. One of the main disadvantages of this lag was that it limited short-term traders from benefiting from changes in price that would occur during those 3 days. They would have to wait the entire 3 days before they can make any other move. But now, since 22nd November 2021, we officially have day trading on the NSE. Day trading is basically the ability to buy and sell shares multiple times during a single trading day. In the Kenyan market, this falls between 9:30 a.m. to 3 p.m. In this video, I'll be breaking down everything you need to know about the new day trading feature. All the functionalities that you need to be familiar with in order to complete a day trade. We'll do a practical day trade example, and we'll also go over the fees and commissions and the rebates that have been introduced with day trading. So let's move over to the tutorial. On the screen, you can see the AIB Digitrader app. The online platform will look slightly different in design, but all the functionalities are exactly the same. Today we'll focus on the day trading features. I've made a video previously taking a walk through this particular stock trading platform, and you can watch them on this channel. One of the 2 key features that has since changed with the introduction of day trading is under the trade functionality. So click on the trade icon. Right here at the bottom, you should be able to see delivery versus intraday, where you can now choose which of these you want your trade to fall under. If you choose delivery, it means that you're operating under the old system of T+3. This is for traders who are not planning to buy or sell those shares again that day. Everything will work exactly the same as it always has, operating on the T+3 business day schedule. However, if you click on intraday, this means that you want to buy or sell those same shares within that trading day. Suppose you put in an intraday buy order for 1,000 shares. The main implications of this is that you can sell and buy back those shares multiple times within that trading day. There is no limit as to how many times you can buy and sell those particular shares. 2 is that you do not have to sell all the shares. You can sell a portion of those shares. Suppose you sell half of those shares and the day lapses. It simply means that the other half will convert back to the T+3 normal schedule at the end of the day. Another implication is that you receive 2 cost benefits when conducting a day trade. In general, with every normal trade you make, the total cost is about 2.1%. This is a summation of various levies that you can now see on your screen. We went through these fees in a previous video. If you conduct a day trade, you earn a rebate from 2 of these levies. A rebate is basically a refund. On the NSE levy, you receive a 5% rebate, and on the brokerage commission, you receive a 50% rebate. The rebate on the trading commission is calculated on either the buy or sell transaction. This is an aggregated refund, which means at the close of every trading day, your total intraday order value is summed up, and the rebates are calculated on the total cost that you paid that day and refunded to your account. You can see this rebate as a cost reduction or a profit to your account. Now, before we jump into a practical example, let's address a few technicalities. What happens to my shares if I buy them using the intraday function and don't sell them that day? The shares will simply revert to a normal trade the next day and operate on a T+3 schedule. Can I buy or sell shares on a T+2 schedule, meaning I buy them today and sell them tomorrow or any other time in between? No, shares can only be bought and sold either on an intraday schedule or on a T+3 schedule. If you don't sell your shares or buy your shares and they lapse into the next day, they revert to the T+3 schedule. Where can I receive a breakdown of the order charges and the rebates that I've received during the day? At the end of the day, you'll receive via email a contract note summary, which will break down all the order charges and the rebates you've earned during that day. What if my intraday order is still pending by close of the trading day at 3 p.m.? On the normal trading schedule, this would not be a problem because if it's pending, it would simply execute the next day or even during that week, depending on the valid up-to-date you've inputted into the platform. But if it's an intraday trade, that means that at the end of the day, the trade would simply cancel. Now for the practical part, let's do an intraday trade together. In order to do a day trade, just as you usually would, click on the trade icon, then put in your security. Let's assume we'll be buying East African cable shares. Click on the drop down, and there we have it. In another video, I mentioned that with ET normal, you are buying more than 100 shares, and with ET odd, it's less than 100 shares. Let's stick with ET normal and buy 100 shares. At this point, it'll give you a price range, the current prices in the market at that point in time. This range right now is between 1 shilling and 9 cents and 1 shilling and 33 cents for these particular shares. In order to get more insights on supply, demand, and price availability, you can click on market depth at the bottom of the screen. At the bottom of the screen, you can see modify or cancel, market depth, stock profile, chart, and close. Click on market depth. These are important insights for any trade, but especially for an intraday trade as you want quick execution. This will show you 1, if the supply of those shares and at what supply price. Choose the appropriate price to ensure quick execution of your order, meaning it will not remain pending for a prolonged period of time. On the right side of the screen, we can see that there are 13,400 East African cable shares available at a supply price of 1 shilling and 30 cents. Our selected quantity of 100 shares falls within the 13,400 supply quantity available, and therefore will likely be able to execute at the current price of 1 shilling and 30 cents or lower. If there happens to enter in the market an even lower price than the 1 shilling and 30 cents as you click buy, the platform will automatically pick that for you. So don't be surprised if you see your order execute at an even lower price than the one you've picked, which is a good thing as a buyer, you're always looking for the least possible price available. So click close at the bottom right of the screen and we'll key in 1 shilling and 30 cents. For the valid up to date, because this is an intraday trade, simply click the same day. Make sure to click intraday and buy. On this screen, it will break down your order for you. Buy 100 East African cable shares at 1 shilling 30 cents for your member number. At the moment, that is blurred on the screen. Then we have your order value. Since you're buying 100 shares at 1 shilling and 30 cents, your order value is 130 shillings. And then we have your fees. First, there's a brokerage fee, which should be 1.3% of your order value, and your transaction charges. Your total fees should add up to about 2.1% of your trade. Your net consideration is therefore 134 shillings and 40 cents, with the fees being the 4 shillings and 40 cents. So click Submit Buy Order. Your order request has been accepted for validation. At the top right of the screen, you can see a shopping cart, a T, and a thumbs down. If you click on the shopping cart, it will just show you that your order was accepted. Your buy order for East African cables at 1 shilling and 30 cents. Okay, now you can go back to the home page, and under order status, you can check if your order is still pending or if it's been traded. Right now, you can see that your order for 100 East African cable shares at 1 shilling and 30 cents is fully traded. This means that the trade has been executed. This happened really quickly because you checked your market depth and chose a prevailing supply price. If you don't choose a prevailing supply price, it may stay pending for a period of time. To confirm that it's been executed, you can click on the executions icon, and you'll see that your buy order for 100 East African cables at 1 shilling and 30 cents has been bought, and that means that the shares are now in your account and you can sell them at any point during the day. If you had clicked on delivery under the trade icon right here, if you chose delivery instead of intraday, this would mean even if the shares have executed, it'll still take 3 days before you can sell them again and before they officially settle into your account. But because you chose intraday, the shares are in your account and you can sell them at any point in time. For the sake of the example, I'm going to click trade and sell the shares immediately. Put in your security, again East African cables. Make sure to click on the drop down. At the type section, change from buy to sell and put in your quantity, 100 shares. At this point, we'll put in the price, but again, we'll go to market depth to get more insight. This time, we'll be looking at the left-hand side of the screen because we are completing a sell transaction. We can see here that there's various demand levels for our shares depending on the price. At the moment, the highest price in the market is 1 shilling and 20 cents, and the demand quantity is 300 shares. Because our 100 shares is less than the 300 shares available, likely all of them will execute at this higher price of 1 shilling and 20 cents. However, if there's a higher price in the market at execution than the 1 shilling and 20 cents, our order will automatically take the highest price. This is a benefit to the seller, as a seller, you're looking for the highest price possible in the market. However, for now, we'll choose the highest price here, which is 1 shilling and 20 cents. If you remember, we bought our shares at 1 shilling and 30 cents, and therefore this is a loss. Ideally, you would wait until the demand price covers both what you bought the shares at and the fees that you paid. But for the sake of the demo, we'll put in this price of 1 shilling and 20 cents. So click close at the bottom right of the screen and input your price. Again, in the valid up to, choose the current day because this is an intraday trade. Make sure to put in intraday and click sell. Again, your order will be broken down for you. Sell 100 East African cable shares at 1 shilling and 20 cents. You can see there that the order value is 120 shillings and your fees are listed out. As this is a sell transaction, your fees will be minused from your order value, and therefore you'll only be buying shares worth 115 shillings rather than the 120 shillings that you put in. Then click submit sell order. Your order request has been accepted for validation. If you click on notifications, you'll be able to see your trade confirmation. And if you go back to the home page and click on order status, you'll be able to see your sell order right there. Again, it's fully traded, meaning it's executed immediately. If you go to executions, you'll again be able to see it right there. And just like that, you've completed an intraday trade. And we're done with our day trading tutorial. It's as simple as that. If you have any questions, please leave them in the comments and we'll make sure to address them.